Hello traders, it's Rich with breathingwiththemarkets.com. How you doing? Hope your week is well. Today is Wednesday, the 28th of August, 2024. I just wanted to talk a little bit about a stop loss. A stop loss, in my opinion, is like a security blanket. If you depend on a stop loss, you'll probably never get rid of it. There might be pros and cons to a stop loss. If you think logically, price will pull back on you and shake traders out of the market. Unfortunately, there are a lot of traders that squeeze the market. The market has to breathe. A trade must be able to breathe. Just because you get into the trade, it doesn't automatically go in the direction that you want it to. That's obvious. Numerous traders are knocked out of the market because of their stop loss, and their P&L continues to go down, and they still haven't figured that out. Why are you going to use a stop loss if you think you have the direction right? If you think you did your homework on your trade, are you an investor? Are you a trader? Are you a scalper? Intraday? Do you just trade overnight? Several different ways. You have to decide what style of trading. If you're scalping, you can have a mental stop. Some people have a stop loss. I don't know too many scalpers that do have a stop loss. Actually, I don't know any of them. But the point is, if you're a swing trader, are you allowing the market to breathe? Or are you going to post you risked one and you made 10? That is not consistent. That is wiping away all of your losses. A lot of people will have 1 to 15, 1 to 20, 1 to 10, because they're going in the market and they want to choke the market out. And by accident, it takes off in the direction that they wanted it to. Can you consistently trade and get in and out of the market whenever you want? This is enough for me. I'm out. I have a little pullback. Who cares? I get in, pulls back against me. Who cares? Are you trading freely? That is true freedom in the market, when you're able to just breathe with the market and you're able to get in the market and allow your trade to work. If you get in the market and you choke your trade and you continue to get stopped out, that means you have not leveled up and you have a lot more to learn, and you need to be able to grow and become more aware of the movement in the market. Because if you have a high probability trade and you did all your homework, no matter what it is, but you did all of your homework, why are you going to put a stop loss there? Ask yourself that question. Why am I putting a stop loss here? Are you scared? Be honest with yourself. For example, if you're on MetaTrader 4 or 5, trading back in the day when you were able to, whether you're in the US or not, but if you still are, what happens to spreads when the market pauses for an hour? I've been in trades where I was up 200 pips on a currency. All of a sudden, 340 pip spread surfaces instantly, knocks me out. Now I owe them money. How does that happen? Oh, cleaning the books up, clearing the books, wiping those traders out. You mean to tell me that there needs to be a 340 pip spread and you want a stop loss? How many times are you going to get bit before you learn? So one of two things. You either need to level up and learn how to trade with a better strategy, or don't enter the market at all. Because if you have FOMO, or if you're scared of getting in the market, afraid of losing your account because you have the highest probability trade, something's wrong. Something is drastically wrong. If you want to learn how I trade and how I view the market and how I get high probability trades, visit breathingwiththemarkets.com, and I offer a mentorship there. And I teach the mentees how to navigate through the market. And then they practice that skill over and over and over again. And they get better and better and better as they continue to practice. exactly what I'm showing them. How could you not get better over time? If I'm showing you something and you just flat out refuse to do it, or you think there's a better way, that's up to you. But if I show you something, wouldn't you naturally get better over time? Or are you following a gambler who says, sell at a high and buy at a low? When it's overextended, figure it out. It's intuition. It's a hunch. I think the market's going to up right here and it dumps. I think it's going to down right here. And it's a rocket to the moon. You know why? Because you don't know where you're at in the market. It could fake out one way and then go in the direction it's supposed to go. The market doesn't turn on its own. It doesn't just take off and fake you out in a sense that it was setting up a long time ago to go in the direction it intended to in the first place. It doesn't take people out. It will quickly spike in one direction or spike and hold for a little bit and then turn around and travel in the direction it intended to in the first place. So, do you know how to locate those areas? Do you really know how to navigate through the market? Or are you looking for a fair value gap that I call gaps? They're just gaps. What's fair about those? It's a gap that's printed. Impulsive. Impulsive move doesn't mean it's moving anywhere, okay? Look at a volume chart and look at a candle. Do they even match? No. And if you see a big red bar going down, wouldn't you assume without looking at it that you might see a big red bar on the bottom of the volume? Because isn't volume supposed to match? Why are you looking at a volume chart if you have the manipulation right in front of you? Is the manipulation on top as accurate as it is down below? Oh, you mean the volume's correct, but the manipulation up on top in the chart is wrong. Which one is it? Can't have it both ways. Pick a position. I'm talking in general. If you use it, what is it supposed to mean? The market is manipulated. And if it's manipulated, is the volume manipulated too? Because that doesn't even match the candles typically. Oh, you're going to look at a DOM. And you're going to see all the buy and sell orders. And then you're going to say, oh, there's 1,000 right here. Therefore, I think I'm going to sell because I see 1,000 sell limit orders here at the top. How do you even know that's accurate? Why are you using that when all you have to do is look at the chart? The chart is going to tell you where price is going. It's as simple as that. If someone can show you how to navigate and use the chart against itself. How do you know where the big banks are getting in? Do you even know? Or just because we have a rise in price or a dump, oh, that's because of the banks. Really? Not because of the manipulation, the algorithms, but the banks, huh? So when I know where price is going to go, and I know when I could see a dump or a pump, you mean to tell me I know before the banks know, and then for some reason the dump and the pump happens in the area that I understood where this would happen? None of it makes sense. None of it makes sense. I'm not that smart to understand when the banks are going to increase, put money in, or take money out, or when they take profit in large sums of money and the retail traders are left holding the bags. But because of me studying the market as much as I have, I can see price. And I understand where price is going and what it's doing and where the highest probability of trades are, according to my data and my experience in the market. That's not fake. I am sure there's other people that can read a market. That's not fake. If you read the market, you think that would be fake? Or you think that would be a level that you may want to get up to, right? It shouldn't be about the money. I just hit $1 billion on TradingView and they gave some certificate or performance data. $1 billion trading the fake system, 304 trades, 100% hit rate. Is it fake? It's the system we're using, right? Is your platform fake? And if it's that easy, be my guest. Go ahead and do it. Since it's fake. Traders or gurus keep telling people that that's fake. If you're not live, that's fake. Is a skill fake? Is our payouts fake? Are certificates fake? Everything's fake? Maybe they're fake. Have you ever thought of that? Those who keep calling everyone else fake are probably the ones who are fake, right? Think about it. Do they have some insecurities that they don't want people to know? That they cannot navigate through the market? That they have positive cash flow coming in from selling programs, right? I don't know how many people have signal groups. What about all those that have signal groups? I could call out trades. Absolutely. Oh, yeah. I call swing trades. Oh, yeah. And pip the crap out of it. I choose not to. Doesn't mean I'm not able to. Is that fake? Everyone has their own gig, right? Well, one thing you should never do is take something away from someone else. All these traders are at different levels, right? Top trader in the world knows what he or she can really view the market. I'm talking view it like a computer. There's no reason why you can't, because your eyes you can see the chart. And if you look at a chart long enough, you're going to see what the movement of the chart is doing, right? Well, the computers do the same thing in AI. So you can tell the computer exactly what to do, write programs if you can write a program. I can't write a program. I know nothing about that. I don't need to write a program because I have my eyes. I can see the program with my eyes. I could see the movement with my eyes. I would rather have that than depend on a program. I would rather be able to select my own trades than to depend on a program or a system that bought and sold. It's up to you. Either you start to trade and put in more time or get more education with the right people, or just keep practicing on a demo account. But if you're actually using a stop loss in the market and you don't even have a skill, you're throwing all your money away. Your P&L is you're going to wipe your P&L out. That's a fact. You're not going to just get lucky and keep getting lucky over time. I'm not against stops. I'm not against those who use stops. I'm asking you to think logically and ask yourself, why am I using a stop? What do I feel like when I don't use one? Have I trained to stay in the market? Have I truly trained to stay in the market? How do I train to stay in the market? Patience is stronger in the market versus patience outside of the market. People get that confused because it's not about pushing buttons. And if you're one of these people that says, oh, all they do is just push buttons, but you're not actually hearing what people say, or they're making excuses as to why they trade that way, and you don't have the knowledge yet to understand that they're just feeding you a bunch of bullshit. If someone cannot answer specific questions with their students, specific questions with their students, then you may want to ask why they're not able to answer those questions. And if they say, oh, I just don't care about that, that's not my style. You mean it's not your style to understand the entire market? Why are you trading? Are you a gambler? Are you gambling with the cash flow coming in to increase your profits over a period of time? Are you taking those profits and putting them in the stock market and just allowing them to grow? Don't follow a gambler unless you're going to gamble your life away also. Whoever he or she is, if they are gambling and they just brag about a 30% hit rate, they brag about a 50% hit rate, and that's all you need is to win more than you lose. Well, wait a minute. A child in second grade can count marbles on one side of the table and marbles on the other side of the table and tell you which one has more than the other. That's really not difficult to say. Win more than you lose. Another duh moment, right? Just win more than you lose. That took a lot of thought. If that's what you want to do is just win more than you lose, don't trade. It's not for you. It's not about winning and losing. It's about understanding the market. You will lose, and I'd lose. Also, traders are humbled all the time without notice. Are you finding the highest probability trades to increase your hit rate? That's the question you need to ask yourself. Are you hoping and praying that you're at 50-50 and if I just get a 1 to 3 risk reward, I'm just going to erase all of my losses? I would suggest change the thinking, change the way you think on risk to reward. Work on having higher probability trades and not worry about the risk to reward. Don't choke the market out. Allow the market to breathe freely. Allow a trade to work. Does anybody explain that? They're not saying that. They're telling you to move up to a higher time frame. Because the lower time frames will just wick you out. It's sporadic. The lower time frame is just a faster time frame. It's doing the same shit that's on the higher time frames. They just can't trade the lower time frames. That's a fact. If you could trade the lower time frames and you trade volatility in the lower time frames, it gets easier going up. It's just boring as hell. It's boring up there. But to each his own, right? There are great traders all over the board from low to high time frames. But are they out in public? I would suggest trying to learn the foreign language, which is a chart. Don't hone in on Elliott waves or all these names. Not taken away from Elliott Wave. I'm just giving an example. Forget all the names. Who cares? Who cares what a candle looks like? Who cares? Learn the movement of the chart. Spend your time wisely. A stop loss is a security blanket. There are inherent risks to trading. Yes, no one is telling you just to dump money in the market, and I'm not telling you to dump money in the market. Don't use a stop and walk away, because that's not what the conversation is. And if that's how you feel, then this conversation's not for you. I'm looking for traders, not naysayers and haters. I'm looking for traders. Someone who can appreciate a skill. Someone that wants to learn how to navigate through the market and get higher probability trades at the market's weakest point. That's who I'm looking for. Trading is not easy. Education is all over the board. There's good and there's poor. A high, low, and close on a candle, me, doesn't mean anything. Favorite candles? Doesn't mean anything. Think about the stop loss. Think about where you are in trading. And then they decide to give up. That next day, just one more day, they would have found something that they were interested in or found something about the market that helped them over the hump. Trading is not about money, it's the skill. People play high school, sports, college, after college, in different competitions, the pros, single A, double A, triple A. They're out there having fun, learning a skill. They learn every day. They get better and better. You never know if they're going to get a base hit or not. Don't you want to be predictable? You can become predictable by finding higher probability trades. And as the higher probability trades surface, then more likely than not, you'll be successful at that. The only difference between the wealthy and the not so wealthy is because the wealthy take a calculated risk. I didn't say a calculated gamble. It's called a calculated risk. So if you're able to understand and know where to find the higher probability trades, that is taking a calculated risk with your money, with your demo, with your investment. It's not gambling. If someone calls that gambling, well, then buying a house is gambling too. Yes, it is. Buying a car is the worst investment. Yes, it is. Everything we do in life is a calculated risk, right? It should be. When you go out and buy a property, when you go out and buy a car, you should do your homework, right? Trading's no different. How you live your life, if you don't have a structured life at home or you don't have structure in your life, trading is going to be very, very difficult for you. If you don't listen to the wise and you want to challenge, trading is going to be difficult for you. If you can't put your opinions aside and listen to someone who can navigate through the market, trading is going to be difficult for you. If you're following gamblers and someone who admits gambling and a 50-50 hit rate, just win more than you lose, trading is going to be difficult for you. The impossible is possible. Who says you can't? Who says you can't do something? Yourself or someone else? If someone else told you that you can't do something, if someone else told you you can't trade like you're a robot, if someone else told you there is no mechanical rules-based trading that works, who are these people? It sounds to me like they haven't leveled up. You mean to tell me if you're looking at a chart, you're looking at the bullhead behind me, and you see all these lines and dots around there, you mean to tell me that over a period of time, if you looked at that as often as you should, if it was a chart, that you would not understand that language, or that picture would not be embedded in your brain, and they said, go ahead and draw that, and after a couple years, months, if someone taught you tricks of the trade, disclaimer, there's no tricks of the trade, but knowledge in the market, that you could not draw that drawing dot for dot. Is that impossible? If you say that's impossible, this is not for you. That's easy if you looked at that every day. The impossible can become possible. Each day that you do the same thing over and over and over again, naturally, you're going to see it quicker. Naturally, you will execute quicker. Then you will execute without hesitation. It is robotic. You will be patient because you understand what the market is doing. You see it with your own eyes because someone told you how to look at the market. If I tell you how to look at the market and I show you how to look at the market, if someone practices, how could they not see the market? Are you following somebody that can actually see the market? Or are they just buying highs and lows, selling highs and lows? Maybe this works. Maybe that works. Just because one person cannot do something doesn't mean no one can do it. Just because there's not a computer program that they understand doesn't mean someone doesn't have it. Just because there isn't an AI program or trading bot that has a hit rate of 100% and it's not open to the public doesn't mean it doesn't exist. It's just stupidity. Just because it's not in front of you, it doesn't exist. That's like someone claiming to be, and I won't say it. It's amazing. The amount of hours that I have looking at charts, studying them, analyzing them, each and every move. I cannot unsee what's in front of me. And sometimes that gets the best of me. Because where is the stopping point? Where is loading up on trades? When is it enough? And accidents can happen. Mishaps can happen. Being humbled can happen. At the right moment in time. It always seems to be that way. When you load up, and here it comes, and all of a sudden it wants to whip around for some unknown reason of manipulation. You cannot control the manipulation in the market. One thing we can control is where we execute and get in the market. We don't really control where we get out of the market. It's not like currencies where you're trying to get 10, 15 pips. Sorry, I had to take a quick break, but I forgot where I was at it on the pips and stuff like this. So everyone tries to, when traders are say, I'm going to get out right here because I think price is going to go down to the low. That's where my profit target is. Who says it's going to go to the low? They don't even know where they're at on the chart. I see it all the time. I saw discords. I saw hundreds and hundreds of traders that were taking trades in the wrong direction of the market. Over and over and over again, following their fearless leader that had money just rolling in. Sad, man. It's messed up. How are you even calculating risk? Are you using a risk calculator where you go in there and you put how far your stop loss is and how much you're willing to risk in your trade and doing all this? How well is that working out for you? What about the traders that say, oh, I have a $5,000 stop loss. I have a $25,000 stop loss. But they never, ever let their stop loss get hit. And then they come back and say, oh, I have risk management. Well, if they said that they were willing to lose a certain amount of money, how come they didn't allow their trade to play out? If they had it above a high, their stop loss above a high or below a low, why didn't they allow that to play out? Have you ever asked yourself that question? There are some traders that actually do allow their trade to play out. They are more confident in their trades. They allow it to hit the stop. And if you allow your stop to get hit, you are more than likely going to learn over and over again on what not to do or become a better trader. Your skill level must continue to increase. The majority of traders can never even get payouts. You can continue to win throughout the year and then one bad trade take everything away. Does that mean you're not profitable? You're not a profitable trader because you don't have money just come out the windows of your house or your car. That's what's called profitable trader. Or you're only profitable if you buy a car or a house or a boat or a watch. The definition of profitability is different for everyone. Okay? It is different for everyone. Everyone has their own profitability level, right? So a trader may believe that they're profitable if they're able to provide a little bit for their family. Maybe not everything, but a little bit for their family, right? Then you have other traders that may not have a family, which costs money, right? They may be single, he or she, and they buy nice things, right? They might not have children or a significant other. It costs money too, correct? Doesn't mean they're not profitable, or doesn't mean they're more profitable, right? So profitability is different for everyone. Are you able to get paid out? Are you able to have positive months or weeks? Are you able to do that? Are you able to have third party, like from a prop firm, futures, wherever it is? Do you get payouts? Not one, not two or three, but 1, 2, or 3 is a whole lot more than the other 200,000, right? But are you able to get consistent payouts? Are profitable traders able to blow all their winnings? Of course. There are traders that blew millions and had to start completely over. Does that mean he wasn't a profitable trader? That means he doesn't have a skill. Because there's difference between money. Money is not everything. And you know what? There's a lot of people that might have a little money and they think it's king. It means nothing. It's a piece of paper. The skill is worth more than money. Everyone is at different stages in their life. Some people want to use trading as their primary source of income. Some people have 2 and 3 jobs and they trade. They might be a profitable trader and have 2 jobs, whatever it may be. Right? They may have a night job and a day job, and they may swing trade, which is more of an investment. Swing trading is an investment trade over a period of time. Because back in the day trading is you close everything out at the end of the day. And back then, and still I believe now, if you don't close it out, you have now become an investor. You made a trade, but you're looking for a longer term investment. Therefore, that would be like swing trading, right? Your intention was going to hold this a while until it started to move in my direction. Maybe it went sideways forever and a day. But still, if it's going sideways forever and a day, it's just priming. The point is, everyone has their own threshold. It doesn't have to meet someone else's threshold or their own desires in life. Just because you have a nice car, fancy watch, and flash cash doesn't mean you have a skill. The point is, focus on yourself. Don't allow anyone to tell you it doesn't exist. That's impossible, because you can make the impossible possible. Just because they can't do it doesn't mean you can't do it. And just because you can do something doesn't mean someone else would be able to do that. Everyone is at a different level. You're only as strong as your leader, and you're only as strong as the education. And education does not come free. Mentorships do not come free. The difference between the wealthy and the not so wealthy is the wealthy takes calculated risk. The not so wealthy, a lot of them are scared to do that. You have to be able to train to stay in the market, train to get the higher probability trades and to understand them, see them, witness them, feel it, what it looks like, feel what it's like to be inside that market. If you want to learn how I trade and approach the market, go to breathingwiththemarkets.com. Please read all the disclaimers on the website. I'll see you soon. Thank you. Have a great day. Peace.